Traders and investors, it's Serge Berger here for a Monday, May the 23rd. Last week we had Home Depot report its latest quarterly results, and the stock reacted muted at best, if not negative. I'm going to walk you guys through that right now. My base case is not to chase the stock higher. There's various types of adjustments or trades that can be done around this. So let's first walk through the case. Obviously, Home Depot, very much a strong bull trend here. Not something you necessarily want to sort of lean against structurally, but something that I do think is in desperate need for a better pause. If you look at this, very basic, you can see obviously Home Depot has managed to extend that rally notably in 2014-15 once it started getting above resistance in 2013 after some consolidation. Well, after that, we have seen a very steep ascent in 2015, even into basically last week. The stock managed to continue to push higher marginally, but the upside momentum, very much as represented also in the broader market, continues to deteriorate. Market breadth in the broader markets continue to deteriorate, and Home Depot is one of these stocks that's causing this. You can see from a momentum perspective, the relative strength index continues to make a series of lower highs ever since momentum peaked last March. So that's like 14 months ago, momentum peaked here in this latest bull leg. So if we now zoom in a little bit closer so you guys can see what's happening on the weekly chart here, and you can kind of forget the moving average here for a moment, just look at the price action up here, and you can see that basically Home Depot has managed to basically keep in check here and continues to find resistance up here anywhere between, say the mid to high 130s, and basically this continues to play out. The stock is just having a very difficult time pushing higher. It's not yet falling apart, but it's having a difficult time pushing higher, and I think for the time being, this is fairly telling of what could be in store into the near to medium term. If we now take a look at this on the daily charts a little bit closer up, you'll see that the stock did manage to give us basically a potentially a breakout, fake out move here in over the past couple months or so, as it marginally snuck above those November 2015 highs. But sure enough, with last week's weakness, the stock broke back below its 50-day moving average, I should say, which is this yellow line. You can see that has been a decent barometer of support and resistance. Not perfect, but again, nothing's perfect. And we're now basically consolidating below that area of what used to be support here for at least a number of weeks, really. So I do think the stock is very, very much capped on the upside. I certainly wouldn't be chasing it higher. In fact, I think there's multiple things you can do. One can either buy cheap put spreads. Basically implied volatility isn't very high, so I don't know if I would be a seller of options, but I think a buyer of some cheap put spreads, give it a couple months out in the future at least, for this stock to then potentially work back at least towards the I'm going to say mid to low 120s. I tend to think the stock can go much lower, but as a first target, I'd probably target something like a 123-24 area on the downside. So certainly a stock that I think at the very least shouldn't be chased higher. Maybe if you want to be a little more aggressive, something that one could consider buying some cheap put spreads out in the future. Please follow me on Instagram. The link for Instagram is right here. You can click on that and follow me on Instagram if you want to see more about sort of the trader and active investor lifestyle, behind the scenes shoots of my office, things like that, how I meet with investors, and the trips I make around the world to meet investors, and sort of how I trade on the go. Also, please like the video, guys, and as always, I'll see you in the next video.